This is your LMAX exchange technical update for Friday, February 10th, 2017. So the euro is showing signs of potentially wanting to roll over, but it's going to be 106.21. That's the key level to watch below. That's the low that we saw back on the 30th of January, and a daily close below that level will be required to officially put the pressure back on the downside and suggest that the market is ready to resume the downtrend back towards the recent 14-year low at 103.41 from early January of 2017. At this point, a break above the recent highs that we saw up around 108.30 would be required to keep this trend going, this correction going in 2017 higher, and threaten a break above 108.75. So again, right now, the key levels to watch above and below are above 108.30 and below 106.21. But again, look for a daily close above or below those levels for clearer directional insight. Sterling dollar. So cable is stalled out ahead of 27.75, that December peak, and is now trying to figure out what its next move is going to be. Key levels to watch above and below come in here. Above at 127.07, that's the recent high that we saw, and below the recent low that we saw around 123.47. So a break on either side will be required for clearer directional insight. A daily close back below 124, however, will do a good job putting pressure back on the downside. Dollar yen. So dollar yen has seen a nice little bounce over the past couple of sessions, but overall the market still retains its bearish bias on a short-term basis and could still be poised for fresh downside towards a measured move objective at 109.50. It would take a break back above highs around 115.60 to take the immediate pressure, short-term pressure off the downside. Again, the broader structure here is constructive, but there is still risk for another pullback towards a measured move at 109.50. Euro Swiss. So Euro Swiss continues to trade within a downtrend and is looking to retest that 2016 low at 106.24. We have seen a bounce in recent trade, but again, rallies here have been very well capped, and only back above 107.60 would compromise the bearish outlook. Aussie dollar. So Aussie has seen a very nice correction in 2017, but the market could finally be stalling out after stalling just shy of 77 and ahead of critical medium-term resistance up ahead towards 78. Look for a daily close here back below 75 to confirm the resumption of bearish price action for a move back down towards the 70 area. Dollar CAD. So dollar CAD has been supported into dips just below 130 in recent trade. The 130 area is a very strong psychological level, and although we did see a break just below, it hasn't been able to close below that barrier, and there is risk for fresh upside now back towards recent resistance at 33.88, which guards against more significant resistance, that multi-day peak around 136 further up. Kiwi dollar. So Kiwi has finally shown signs of rolling over in 2017 after stalling at 73.76. The market overall continues to look like it's topping out off that 2016 peak just shy of 75, and there's risk for a bearish decline now back towards medium-term support in the 68.60 area. SPX 500. The S&P 500 is pressed to another fresh record high on Thursday, and the market now could be poised for a measured move upside extension towards the 2330 to 2340 area. At this point, it would take a break back below 2232 to take the pressure off the top side. Gold. So despite setbacks in gold on Thursday trade, the market overall retains a very constructive outlook and is poised for fresh upside towards a measured move extension in the 1260 area. At this point, it would take a break all the way back below 1180 to take the pressure off the top side.